From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 20th, 2016. In just a moment, we'll be taking a look at the USDCHF, the US dollar versus the Swiss franc, for today's trade analysis. But first, I want to recap a couple of the trade suggestions made for our members in the live daily trade room and over the past couple of days. First off, starting here on the GBP USD Great British Pound US dollar, we've been studying the downtrend pattern that's happening here on the 4-hour time frame. You can see basically the pattern is this: it falls and then it rises into resistance and then makes a new fall. And then it breaks the next support, rises into resistance, and then makes a new fall. And yesterday was no different. We see the market pulling back into resistance, the orange shaded area in between 1.3050 and 80. So yesterday we took the sell all the way up towards the top of that orange shaded area into the 1.3070 level. So getting very close to the top of the orange shaded area. So sells from the 70 level, right about right there. You can see right now, if you would have stuck with it, sitting over 100 pips of profit. Now, I applied the Trade Manager. It's a tool available for our members to the trade, and so it did go down. We saw a decent amount of profit from the 70 level again. We saw the market fall down towards the purple shaded area, seeing 45 to 50 pips of profit on the trade. Market went back up into the orange zone. Trade Manager had locked me into profit, and it took me out of the trade. Just that little spike there back into the orange zone took me out of the trade with profit, and then proceeded to fall back down. So if you stuck with it, you're seeing over 100 pips of profit. If you got out, like I did, of course, hopefully you were taking measures to protect profit, protect the trade from going negative again. But all in all, a profitable trade as we look for the continuation of the pattern for the pound dollar. Next trade we were looking at yesterday was here on the USDJPY. The suggestion yesterday was to buy into the 101.60 level. Basically, the pink shaded area you see in the middle of the chart. 101.60 to 35 is the pink zone. We saw support here, support here. So yesterday, knowing that we had the BOJ this week, FOMC this week, and the possibility of the market just going stale and flat until we get through that news, we went ahead and took the buy once again here into the 60 level. You can see the market touched down into the 60 level. We saw the market first off bounce back up. So we went from 60, we saw the market push all the way up, 40, 42 pips of profit. Then it came right back down. Trade Manager again taking me into break even or profit, and market came back down, took me out, and now it's going right back up. So that's the case sometimes in these kind of waffling around markets before you have significant news like the BOJ and FOMC coming up in the next 24, 36 hours or so. We know that the market can go flat, bounce around like this. So sometimes you get break even, sometimes you get some profit, but that's what's happened with those two trades over the past 2 days. Both of them actually showing decent amounts of profit, 50 to 60 pips of profit or 40 to 60 pips of profit on both of those trades. So decent opportunities. Now, next opportunity I've been studying over the past few days is here on the USDCHF. In fact, yesterday suggesting to buy right around 97.90. Well, we've just been kind of sitting in this trade for the past 24 hours waiting for the market to do something here with this. Let's go ahead and study what's been happening here on the US franc. Zoom it out one time here on the daily. You can see this big black box on the chart. The market's been somewhat of a range. The blue and the black trend line show us the bouncing around inside of here since basically February of this year. It's been bouncing around inside of here. Over the past few weeks, we have been stuck inside this little blue box on the right-hand side. You can see it bouncing around between the blue, the yellow, and the green zone. Well, yesterday we noted the fact that it was above the green shaded area. It pushed right back above the 97.90, 9800 level, pushed above it. In fact, yesterday's daily candle open and closed above the green shaded area. So that gives us a little bit of increased confidence that we're looking for some breakout and some upside back towards the purple shaded area. Well, so far it's been very limited. It hasn't gone all the way up there into the 98.30.50 level. Any dips into this green zone today, I think, still provide some lower risk, not no risk, but lower risk opportunity to go long towards that purple shaded area. Even now, 97.83 is where the current market price is. Even now becomes an opportunity to target back to that purple zone. So we know that there's potential support here, and we'll see that even further when we get down to the 4-hour time frame. The risk is the breakout back underneath the green shaded area. And of course, we know we have significant news over the next 24 to 36 hours that could change all of this. Let's take it on down to the 4-hour time frame. And again, as you get down here, take a look back here where the green circle is. You can see the market settling out here on top of the green shaded area for a couple of days. So a couple of days finding support here, noting that, yes, it sure did break out underneath it, but for the time being, there was potential support here. The potential for it to rally back higher was there, especially the fact that we have been in an upward momentum. This was a bearish momentum. Take a look. It hit the high, fell down into the green zone, eventually broke it and continued to go lower. Well, in the recent time, we've been in an uptrend. It's been rising and sitting on top of that as support. So for the day today, as long as it's within and above that green zone, I'm going to still target the purple shaded area. I know that if it breaks out underneath 97.70, the green zone, probably don't want to stay in it too long because it's heading back down towards the yellow shaded area. So I have an appropriate stop loss. It's right around this line, just underneath the current low. My current stop loss is about a 35 pip stop loss down around 97.55, but of course it's really just underneath today's low. I just really want to see it stay within or above the green zone, start working its way back up towards the purple shaded area today. And again, the risk is the breakdown underneath the green zone, and all of this could change in the next 24 to 36 hours with all the news that we have on the calendar for the day today and tomorrow.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.